are redeeming your units, and you get to redeem your units at the latest market prices. So we can also now look at the key.
So now we've lost the presenter.
So the role of the fund manager. So the fund manager is the one that sets up or promotes the collective investment scheme. So they are the one that does the administrative work for the collective investment scheme. They are the one that invests the fund for the collective investment scheme. And in instances where you need to invest in a collective investment scheme, you are obviously going to approach the fund manager because they are charged with the role of running the day-to-day activities of the collective investment scheme. So, like I said, the fund manager's role is administration of the funds and also undertaking the investment decisions on behalf of the members or unit holders when it comes to the collective investment scheme. And then we also have the trustee. Currently, we have one trustee. This is AMG Global. So the collective investment schemes are set up in trust. So what does this mean? So a trustee is someone who's been granted a fiduciary duty to care for the assets placed in a trust, and this is for the benefit of a third party. So when the collective investment scheme is being set up, usually there is a trust deed that is drawn up, and this trust deed is just a formal document that it acts more like a constitution of the unit trust, and it will outline like details like the full name of the trust, the category of the fund. It will even specify types of investments that may be held within it. So the trustee is charged with governance of the scheme. He is responsible for representing the interests of the investors in the fund. And the trustee is also responsible for ensuring that the fund manager adheres to the trust deed, or all parties adhere to the trust deed. So by virtue of this, like I explained, the trustee is someone who has been granted the fiduciary duty to care for the assets. By virtue of this arrangement, you find that the fund manager of the scheme does not have legal ownership of the assets of the scheme. And so this just also adds a layer of protection. In an instance that anything happened to the fund manager, you find that the fund manager is separate from the collective investment scheme. And if anything happened to the fund manager, it does not spill out to the collective investment schemes assets. The collective investment schemes assets will be safe. And then we also have a custodian, who is also a key player when it comes to a collective investment scheme. So the primary role of the custodians when it comes to the collective investment schemes is custodian of the assets. This means that the custodian is responsible for safekeeping of the assets. Again, if anything happened to the fund manager, this means that your assets for the collective investment schemes will not be affected, as these are held in safe custody by the custodian. So now we can look at the CIS at a glance, or the current position of the collective investment schemes in Zambia. Where are we sitting at? So currently, what we are showing on the screen is where we are sitting at. So we have 10 fund management companies currently in Zambia. These are managing 11 umbrella funds. And under those umbrella funds, we have a total of 59 sub-funds. So the local fund managers, these are fund managers who are locally licensed here by the Securities and Exchange Commission, and they are the ones promoting the collective investment schemes locally here. So I mentioned that we have 10 fund management companies and 11 umbrella funds. So the 10 of the 11 umbrella funds, 2 are being managed by the same fund management company. And what do I mean when I say sub-funds? So an umbrella fund is like the mother body. And then under that mother body, we have different products or different portfolios that an investor can invest in. So the sub-funds simply, they can be, you can call them sub-products. And these sub-products are structured differently. For instance, you might have the gratuity fund. This may be for entities that are looking to manage gratuities for their employees. You may have the equity fund, which is more skewed towards investing in the equities. You may have the balanced funds. All these are like sub-products of the main umbrella fund. So, and then the foreign funds. So the foreign funds consist of foreign CISs. These are CISs that have established outside Zambia, but are being promoted locally here in Zambia. So the products of foreign CISs that are locally promoted here also are supposed to be authorized by the Securities and Exchange Commission. So currently, the foreign funds that we are seeing on the screen there are promoted by Standard Chartered Bank. And these are the likes of funds like Franklin Templeton, BlackRock, 91 Global. So the local fund assets under management are currently seated at 2.1 billion. And just maybe to define what assets under management are, these are the total assets or the market value of the investments that are being managed by the fund managers. So the local funds are currently sitting at 2.1 billion, and then the foreign funds are currently sitting at 315 million. So on this slide, we're just showing the unit trusts that are authorized by the Commission, and we are also showing the fund management companies that are running with the day-to-day of these unit trusts. So like I stated in the previous slide, we have 11 unit trusts, and we have a total of 10 fund management companies. 2 unit trusts are number 1 there. Number 5 are being run by the same fund management company. And then here we have market share by the fund management companies. So of the total of the 2.1 billion, Mpile, the funds under management by Mpile is 58.2%, and then ABC has got 19.8%. Madison 7.44%, and the rest got the rest of the fund managers. Kindly note that Madison Unit Trust and Lawrence Poor are either under supervisory possession or regulatory action. So now we look at the role of the Securities and Exchange Commission in regulating collective investment schemes. So we know that the Commission is the regulator of the capital markets in Zambia, and it has a statutory mandate to protect investors in the capital markets. Suffice to say that the Commission has a dual mandate, that is investor protection as well as market development. So when you're making your investments, you obviously want to invest in markets that are regulated, because you know that in those markets, obviously, regulation provides safety of your investments. So now, how does the Commission regulate the collective investment schemes? So it does this via licensing. So the Commission licenses various market participants in the capital markets, such as investment advisors, asset managers or fund managers, the fund managers that are responsible for the day-to-day activities of a collective investment scheme, such as brokerage firms. And then the Commission also authorizes certain entities. For instance, for a fund manager to run a CIS in the capital markets, they first need to be authorized. That collective investment scheme has to be authorized by the Commission. Then we also do registrations. So companies that are planning to offer securities to the public are supposed to have those securities registered by the Commission. Then monitoring compliance with the law as well. So example of monitoring that is done that we can speak about is, for instance, market surveillance. So the Commission monitors security markets for any irregularities. And then also the licensed entities are supposed to also submit certain financial information to the Commission on a regular basis, that the Commission also does desktop reviews on, just to ensure that these entities are operating within the confines of the law. And then the Commission also does raising awareness and also supporting the market. Like I said, we have a dual mandate. The other mandate is market development. So the commission also ensures that it empowers investors through education initiatives that will equip the investors with the much needed knowledge that is needed to make smart decisions when it comes to investments, such as this one, the town hall. And then, so what are some of the regulatory frameworks that the commission uses to regulate the collective investment schemes? So when we talk about regulatory frameworks, we're looking at what are some of the establishments and enforce. So the commission establishes and enforces rules and regulations that govern the capital markets. So on the screen, these are some of the regulatory frameworks that govern the collective investment schemes. So we have the Securities Act number 41, 2016, which is amended by Act number 21 of 2022. Then we also have the Securities Collective Investment Schemes Rules, SI number 161 of 1993. Then we also have supporting legislation, that is the Securities Conduct of Business Rules, Securities Accounting, and Financial Requirement Rules. So all these frameworks are used in regulating the collective investment schemes. So now you may ask, what are some of the benefits of investing in a collective investment scheme? So the first one there is that the benefits of investing in a collective investment scheme is that they are affordable. So you don't need to be rich. You don't need to wait to have a lot of money to invest in a collective investment scheme. You can invest small amounts of money in a collective investment scheme. For most, or on average, for most fund managers, for you to open up an account or to start making your investment, on average, the minimum is 500 kwacha. For some fund managers, the amount can be even below that. So you don't need a lot of money. You don't need to wait to have a lot of money to be able to invest in a collective investment scheme. So they are very affordable. You can invest small amounts of money. And then the second one is diversification or spreads risk. So when you contribute money or when money is combined in a fund, it can be invested in a broader range of underlying assets that normally I as an individual or you as an individual would not maybe invest in as a single investor. So when monies are put in a fund, they'll be invested in a broad range of assets. These can be term deposits. It can be government bonds. So there's that comes with investing in a collective investment scheme. And then professional management, investment management as well. So because you're investing with a fund manager, you find that this takes away from you the burden of having to have the knowledge in the portfolios that you want to invest in, because the professional investment manager already takes care of that. A professional fund manager manages your investment. And then you also have the opportunity to tap into markets you would otherwise not tap into as a single investor. Sometimes this can also just be assets. You find that maybe a certain entity issues a corporate bond, and maybe the minimum amount to invest in that corporate bond, maybe as a single investor, you cannot meet that minimum amount. But once you pull money together in a collective investment scheme, that money you can be used to maybe tap into those assets that you would otherwise not be able to tap into as a single investor. And then there's also easy access to your money. So unit trusts are easy to sell. You can sell at any time, and it doesn't take a long time to be paid your money. Fund managers also keep a certain amount of liquidity in instances where an investor wants to liquidate their investment. They are easily paid off. So you have easy access to your money. And then it's easy to track your investments as well. You can calculate the value of your investments anytime. All you need is your number of units in that portfolio. You multiply it by the unit price, and you get the value of your investment. And then also investment options to suit your financial circumstances or needs. So investing in a collective investment scheme is flexible. You can invest using a lump sum, or you can choose to make regular payments. And in months where you are short of cash, you don't have to worry. You can invest whenever you have the monies. So the investment option suits your financial circumstances or needs. And then as you're making investments in a collective investment scheme, you also have responsibilities as an investor. Here at the Commission, we are always advising that we need to be smart investors. So now when you're making investment decisions, what does a smart investor do? Firstly, undertake due diligence. So before you make your investment, ensure that you investigate a company or organization that you want to invest into. You may want to look at the entity's financial stability. You may want to look at the management personnel. Entities will mostly post their management on their website, and you may just want to look them up. You may Google them. All that is part of undertaking due diligence. You may review documentation about an entity and their products they are offering. You may want to look at their brochures for the products they are offering. You may want to look at how the funds have performed in the past. Are you able to access their financial statements as part of your due diligence? And then you may also just want to check the fund manager that is marketing this CIS. Are they licensed by the Commission? You may want to check the products that they are marketing. Are they also authorized by the Commission? So you also just make sure that you want to deal with a fund manager that is licensed by the Commission, and you also want to make sure that the products that they are marketing to you are also authorized by the Commission. If you're not too sure whether they are licensed, you can just check them up. We have a list of licensed entities or personnel on our website. You can also email the Commission on info@sexzambia.org.zm. You can request to check if a fund manager is licensed by the Commission, if a product is authorized by the Commission. Then you may also want to monitor your investments. So you don't have to invest and then forget about your investment and just come and check up on your investment 5 years later. You may want to regularly check on your investment, check on the value of your investments, calculate the value of your investment by multiplying the number of units you own by the unit prices of the portfolio you invested in every now and then. And then stay informed as well. Make sure you obtain your regular statements and investment reports from the fund manager. Stay informed about the performance of your investments. Stay informed about where your money is invested. take interest in knowing the assets the collective investment scheme is investing in. Obviously, the entities, when they're marketing these products, they'll have a brochure. It will spell out where they make most of their investments. So take a look at that as well. And then you may also want to report any suspicious activity. This may be reporting to the fund manager or reporting to the commission. Anything that does not look normal on your account, you can get in touch with the fund manager, you can get in touch with the commission. It might be that your units have gone down and you didn't redeem your investment. You can report that to the fund manager. If you fail to resolve that with the fund manager, you can still write into the commission, and that the commission will look into that. How do you get started when it comes to investing in a collective investment scheme? So like I said, firstly, you need to research the fund managers and the collective investment schemes they are offering, including the products. Do your research about the fund manager before you make the decision to invest in that fund manager. Look at the financial information, look them up, check the products that they are offering. Do your research before you invest. Or you can also approach a licensed investment advisor. So again, ensure that the personnel you're talking to is licensed by the commission. Again, we have a list of licensed investment advisors on our website. So you engage a licensed investment advisor who can advise you on the fund managers in the capital markets and the products they are offering. After that, you open a unit trust with the chosen fund manager, and this is very easy to do. The fund manager may just want you to fill in some forms and also produce certain documents as KYC, but it's very, very easy. And then in conclusion, I thought we could also end with a Bible verse from Proverbs 13, verse 11, that says, wealth gained hastily will dwindle, but whoever gathers little by little will increase it. So whoever gathers little by little will increase it just reminds us the importance of patience. Like I said earlier, you don't need to be rich to invest in a collective investment scheme. The little that you have, you can start investing in a collective investment scheme, and slowly but surely it will build your wealthy. So this verse just gives us encouragement that do not despise incremental growth. In little by little, it will increase. Thank you so much.
Okay, that was an interesting presentation. Thank you so much, Lucy. As we've heard, little by little, we can grow our wealth, and investing in collective investment schemes is just that. You're pulling your resources together and you're putting your monies aside little by little, and it's growing with time. We're now going to get into our Q&A session. We have Lucy and the rest of the supervision team and other members of the commission on hand to just respond to your questions. Let me just check what we have in the chat. We'll start there before we can. Okay. So we have a comment from Jonas Mwansa in the chat. He's saying, thank you for the presentation. I'm following. I hope the presentation will be shared to the attendees. Thank you in anticipation. Thank you, Jonas. Yes, we will share the presentation, and thank you for giving us your email address So I'd advise everybody in the meeting, and if you'd like the presentation, simply drop your email address there, but we do have your emails on our database, so we will definitely share the presentation. Okay, then we have an anonymous attendee who's got a question. What is the average time it takes to liquidate an investment in a unit trust? What is the average time it takes to liquidate an investment in a unit trust? Lucy, could you just highlight that for us?
So like I said, it's very easy. One of the benefits I mentioned when it comes to a collective investment scheme is that it's very easy to access your money. Unit trusts are easy to sell. Fund managers also keep some buffer of liquidity for in instances where you need to liquidate your asset. And this would just, for some fund managers, it might take 48 hours, as little as 48 hours to redeem your investment.
Okay, perfect. Okay, Ruben would like to add to the answer given by Lucy. Ruben, please go ahead.
Okay, thank you very much, Stali, for according me an opportunity to respond to the question. Yeah, when this money is invested, when they're of course put into a CIS, they're invested, they're not kept. So the redemption period is largely dependent on the type of asset class that where your money has been invested. And we have a number of asset classes. For instance, property is one of the examples that your money may be invested, and the liquidity is different from the asset classes that are in the money market. For instance, like the term deposits, the treasury bills, and the bonds. So many asset classes. So depending on the amount that is requested to be liquidated, there may be a need to recall that investment by the fund manager so that the money is paid back to you. So there isn't a specified a period for which that particular money has to be liquidated, but it's largely dependent on the type of the asset classes where your money has been invested. Secondly, it's also, as Lucy mentioned, it's also largely dependent on the liquidity position that is maintained by that particular fund manager to fund withdrawals or liquidations that are requested by the fund manager. And these liquidity positions, they vary from one fund manager to another. Thank you.
Okay, thank you, Ruben, for that response. While I have you on the floor, Ruben, maybe I can direct the second question to you, the next question to you. Chengelo Mlenga is asking, what are the average returns on the CIS? Are you able to assist us with that?
I think that is information that is contained on the fact sheet of the investment portfolio or a fund that is being promoted by the manager. I can't. I'm sorry, I can't remember anything on top of my head as in terms of the returns, but it's something that you can take interest by taking a survey, as Lucy mentioned. Be a smart investor by taking a due diligence of checking what sort of products are being marketed by these fund managers and what sort of information is there in terms of the returns. But like any other investment, you expect a risk, and an investment can do well and can't do well. So typical of any investment, you expect anything to happen in any other investment. There's no risk-free investment.
Okay, thank you, Ruben, for that. Then we have another question asking how much capital or money does one need to start an investment, to start investing? Lucy, I think you did mention that you don't need much money, but maybe you could give us an example. Do you know the minimum that one would need to invest? How much money do I need? Let's say if I want to start today.
So like I mentioned, on average, for most fund managers, the minimum that one would need is then thereafter, you can either be doing regular payments, and the regular payments would vary from one fund manager to the other, but usually they are less than the initial minimum amount you need of 500. And for some fund managers, you might actually even need less than 500 to start investing them.
Okay, thank you for that response. So like Lucy mentioned, investing in a collective investment scheme is little by little. So it's 500 today, 100 tomorrow, another 500 the next day. So you keep going. It's something you can do on a monthly basis to grow your portfolio so that it just becomes a lump sum that you can redeem at any time. You can get your money at any time, like she said. Okay, we have another question from Emily. Emily, I think Lucy, you have touched this on how easily one can redeem their money, but Emily is trying to find out how accessible are these investments to the general public? So how accessible are the collective investment schemes, for instance, to the public?
Hi, Emily. So these the collective investment schemes are very, very accessible to the general public. They are for the general public. They are for individuals like you and me. All you need to do is, like I said, research the fund manager before you make your decision to invest. But at any time, you are free to approach any fund manager that you've chosen to invest with. Even today, you can still approach them, look them up. The list within the list during the presentation of the fund managers that are currently authorized by the commission. So the collective investment schemes are for the public. They are for individuals like you and me. We have both retail investors, and also institutional investors. So very, very accessible to the public.
Okay, thank you for that. You've heard for yourselves. They're very accessible. They're for you and me with no restriction. We can all invest in a collective investment scheme. We have another question from Kasanga Sichone, who says, what is the minimum requirement to start a CIS? I take it this is from a person who wants to establish a fund. So Lucy, could you advise us on what is the minimum requirement? Could you just let us know what the minimum requirements are for that? And then maybe in addition to that, you could also tackle the next question, which says, how do you register an investor, and what, as an investor, as an investment advisor, sorry, and what are the requirements? So the same thing. So what are the requirements for the CIS also for investment advisor? Okay, Ruben, maybe you can assist us with that one.
I think the first thing that is needed for you to set up a CIS, the first point of our call is to seek licensing as a fund manager, and all fund managers in Zambia are given a dealer's license or are licensed with a dealer's license, and that takes a process of you submitting the prerequisite documents such as your business plan, your risk framework, your CVs, the key personnel that will be running this fund manager. I mean the fund management company. Once you are licensed or given the dealer's license as a fund manager, the second point of call with the commission is now to seek authorization of your CIS. And at that particular point of you coming now to seek authorization of the CIS, I've used two key words here and hope you paid attention. The first is licensing as a fund manager, and then a CIS is authorization. So you come back to the commission having been granted that license as a dealer. You now seek authorization for the establishment of a CIS. And at that point, the assumption by the commission is that you would have appointed a custodian, as Lucy mentioned, that is a 3-tier model that we have in Zambia. You would have appointed a custodian, and also you would have appointed a trustee, and all these you need to come with appointment letters and also audited financial statements for the trustees and also the custodians that the custodian or custodians that you've appointed. And at the moment, we have 2 active custodians in the name of Stanbic and Standard Chartered, and 1 active trustee in the name of AMG Global. So I think in a nutshell, that's what I can mention for now, what is required.
Okay, thank you, Ruben, for that. We have some more questions here, so we'll try to just go through them because we just have 10 minutes to conclude our town hall this time. Sonke Soko and Boyd Banda, your questions are similar, and Lucy did touch on this during the presentation. So Sonke and Mr. Boyd Banda are asking Lucy, how can I top up my investments? And if so, will it affect my original investment that one made? Then in addition to that, Mr. Boyd says, how does one go? And how are the payments done? And what is the risk exposure in the mutual fund? Lucy? So we can start with how does one grow? How do they top up their investment, and how will it affect the original investment that one has made?
All right. So during the presentation,
How can I grow my money, and how are payments made?
okay. So I had mentioned that the fund manager invests the funds that have been contributed into the fund. So when the returns or the capital is generated of the scheme, these are distributed to the investors according to the holdings in the scheme. So at the time that you will be redeeming your units or in that investment or in that CIS from the scheme, you are going to redeem your units at the latest market prices, because the fund manager does unit prices, sets the unit prices on a daily basis. So you may find at the time that you are investing in the collective investment scheme, I'll give an example that maybe you invested in a collective investment scheme when the unit prices that collective investment scheme was seated at 1 quarter. And then at the time that you are redeeming your investment, maybe the unit price is seated at 3 quarter. So the difference in that unit prices, so you're not going to redeem your investment at the initial price when you made the investment, which is 1 quarter. You will redeem your unit prices at the latest market price, which is a 3 quarter, thereby making money.
Okay. Then thank you, Lucy, for that. Then Mandiza Zimba is asking whether the CIS has a minimum liquid asset that they're required to maintain at all times. I know you did mention that the fund managers do need to have a certain amount of money ready to disperse. So maybe you can speak more to that.
I think for the minimum that they keep, this will vary from one fund manager to the other. And also depending on the, remember I mentioned that the fund managers will also have different products. So obviously when you're making your investment, you also need to understand the products that you are investing in. There'll be products. There'll be products like money market products, which are more short term. So even the investments in that product line will be invested in products that are more short term, products like treasury bills. So also you have to understand why you're making your investment at the time that you're making your investment, so that you choose an appropriate product. And so the minimum that the fund manager will keep will depend from one fund manager to the other.
Okay. Okay, thank you, Lucy. We need to rush through because we still have quite a number of questions to go. So Rocha Mulumbwe would like to know, you've mentioned a lot of advantages of investing in a collective investment scheme. Could you tell us some of the disadvantages of investing in collective investment? That's what he would like to know.
Okay. So I think collective investment schemes, like any other investment as well, there is also risk that the investments that are made can go up, they can go up or they can lose value. So just like any investment, the value may go up or it may come down. So even as you are investing in a collective investment scheme, you need to have that in mind.
Okay. So then we have another question from Joe Makelele. Says most of the funds invest in government securities. So is there a specific regulation that deters from investing in capital markets outside Zambia? And what is the CIS in terms of the CIS size in terms of market capitalization?
Let me take that.
Ruben, would you like to help us with that?
Okay, yes. Maybe we'll start with the market capitalization for the CIS industry in Zambia as of 30th of April 2024. I think Lucy did mention that it was standing about 2.1 billion kwacha, and then in the foreign CIS it was about 321. So in total, it's about roughly 2.4 billion market capitalization of the CIS. Yes, there was a question to do with exposure, and as a commission, we have set up what we call investment limits that are going into these particular asset classes. And you did mention that most of the fund managers, they seem to be channeling their monies towards maybe government securities. We do not have a cap in terms of investment limit on that, maybe because of the risk that is associated on that. But not only that, I think that is also largely dependent on the risk appetite of most of the investors that we have in Zambia. The objectives that you deliver to a fund manager as you take your money, because I guess as you take your money to be invested by that fund manager, you go with a particular objective. So that maybe also speaks on the type of objectives that are being communicated to various fund managers on how your money should be invested. On the foreign CISs, yes, as well, we have an investment limit to which a fund manager can invest so as to manage the risk exposure of your investment. Yeah.
Okay, thank you, Ruben, for that response. I hope that answered your question, Joe. And then we have an anonymous attendee who's asking for a list of fund managers, if it can be found on our website. Yes, we do have a list on our website. And then we have another question from John Hambote. John is asking, what are the tax implications on these investments, or is there a government threshold with ZRA? What are the tax implications of these investments, or is there a government threshold with ZRA?
Maybe, oh, okay. Huh?
Okay, Lucy, you can start then, Ruben.
Okay. So when you are redeeming your investment, at the time of redeeming your investment, the liabilities would have already been taken care of by the fund managers. So the net assets of the fund, the way that the fund managers compute it is that they will deduct the liabilities from the total assets and then divide that by the total units in that fund. So at the time that you are redeeming your investment, it will just be your total units that you have in that fund multiplied by the unit price. The expenses with regards the collective investment scheme would have already been taken care of. And the expenses, these are like the CIS levy, the fund management fee. Remember, I mentioned that the fund manager is separate from the collective investment scheme, and they are responsible for the day-to-day activities of the fund. And so all they do is charge a fee to the collective investment scheme. So that is one of the expenses. Fees like the audit fee, and so tax is not one of them.
Ruben, would you like to add to that, or we can?
Yeah, maybe just a quick one. I think most of the just in a minute, yeah. Most of these returns, they also attract withholding tax, such as interest that is charged on government bonds, and also the interest that is earned from the term deposits, and also other instruments in the money market, or simply the money market instruments. So there is a tax implication that comes in form of withholding tax that is levied on the interest or coupons that are earned from these securities.
Okay, thank you, Ruben. So we've come to the end of our town hall. Unfortunately, the time that's been allocated to our town hall is just an hour. So we have exhausted that hour, but we'll end with one last question, which I feel is quite important, and so are the others. So this one is coming from Siakwema Siamalambo. What proactive measures under its regulation and education functions has SEC put in place to protect investors from unscrupulous entities that promote Ponzi schemes, and also to ensure that investors place their investments in properly regulated schemes like the CISs? So for this one, I'll firstly speak to the education functions. So one of the things that we do, I think Lucy did mention, is that we are doing a lot of sensitization for people to be aware and not to fall prey to Ponzi schemes and any other fraudulent activities out there by offering talks such as the town hall, and also just exhibitions like the trade fair, like the agriculture and commercial show. So we do a lot of those interactions. Also visits to universities and other public places, and any place that you would like to invite us. We're very open to come and address the public and just offer knowledge on how you can protect yourself from a Ponzi scheme. I'll allow any other person from the commission to speak to any regulation that we have. Lucy?
So I think in the presentation we had touched on some of the regulatory frameworks that the Commission uses to for collective investment schemes, and then also had touched on the role of the SEC in regulating CISs. I think we had spoken about licensing, authorizations, and registrations. We had talked about monitoring compliance with the law, where we spoke about the surveillance that is done by the Commission on these regulated entities to just make sure that they are ethical, they are operating within the confines of the law. And also on the regulatory frameworks, we talked about the Securities Act number 1 of 2016, which was amended by Act number 21 of 2022. We talked about the securities, the collective investment scheme rules, SI number 161 of 1993, and also supporting legislation like the Securities Conduct of Business Rules, Securities Accounting, and Financial Requirement Rules.
Okay.
So all those are used to ensure that your investments are safe in the CISs or capital markets.
Thank you so much, Lucy, for that. Thank you, Ruben, for assisting us with the responses. And thank you, everybody, for joining us on today's town hall. We would like to invite you to join us yet again next month, same place, same time, on the last Thursday of the month for another interesting topic. And we're continuing to just, as we've clocked 30 years in capital markets, of capital markets in Zambia, like I mentioned at the start, we are just going to continue talking about the investment options that you have in this market, and also just to see some innovative products that have come up during the course of the 30 years that we have of capital markets in Zambia. For the questions that have not been responded to, please do not despair. We are going to respond to them and send them responses via email. Thank you so much. See you next time.
A smart investor avoids fraud. And here's everything you need to know about being a smart investor. A smart investor recognizes the benefits of planning for his or her future needs and goals, such as education, marriage, buying a car, or even buying a home. A smart investor recognizes the benefits of regular and diversified investments to protect investment from losses, unexpected events, and always looks before they leap, so that they can cash in on the wonderful effects of compound interest. After all, a smart investor knows every investment opportunity is unique and should match their needs, goals, and risk tolerance while making sure to ask all the right questions. A smart investor is not under pressure to make hurried investments to avoid fraud. They know the risks and stay far away from get-rich-quick schemes while ensuring the company that they wish to invest in is licensed by the Securities and Exchange Commissions. So, what do you say? Do you want to be a smart investor? All it takes is cultivating resilience and wise habits. Remember, a smart investor avoids fraud. Visit sexzambia.org.com or our social media platforms today to start your journey to being a smart investor. A smart investor avoids fraud. And here's everything you need to know about being a smart investor. A smart investor recognizes the benefits of planning for his or her future needs and goals, such as education, marriage, buying a car,